Hello everyone, and welcome to the technical analysis of the New Zealand top 50 shares chart. And currently we are in the third week of the lockdown in New Zealand. And I hope everyone is keeping safe. So in this video, I'll be looking at where we are in the market and the current trend of the market. We're going to be looking at things like, is the worst already over for the current market, and whether the market have further downside coming, and some of the reasoning for a potential bull trap. So we had our previous historic highs around the end of February. So for the New Zealand market, we had a high of around $3.25, and since then, due to the disease that's been going around, the whole market has been in a complete sell-off mode, and we finally reached a recent bottom at around about 2 weeks ago at around the $2.05 mark, which is a historical resistance back to the 2017 times. So we hit our resistance area around the $2.05 mark, and since then the market has bounced back into a brief uptrend. Now we're going to be looking at whether this uptrend is likely to continue, or it's something that's going to turn around. Now, in order to do that, it's best if we take a step back and look at the historical data. So for the historic data, we can look at the 1 week charts. So for the 1 week charts, we could go all the way back to 2009, which we had our lows in the 2009, and by drawing a trend line through some of the major peaks and troughs, we can arrive at the main trend line for the bull market for the last 10 years. So as we know that when a market goes up, it doesn't go up straight away, like in a straight line. What happens is that even though the consensus of the market is going up, each individual day the market may fluctuate up and down in between the major trend line. So we have our historic 10-year trend line going all the way up to recent times. Now going back to the single day view, we can see that our current market price is approaching the main trend line that's been going for the last 10 years. And this is really significant because we might be hitting what we call a bull trap. Now, what exactly is a bull trap? So if we bring up the S&P 500 to use as an example, so this was around the end of 2018. So around the end of 2018 in the US S&P 500, there has been a significant sell-off of around 8% only within 2 weeks' time. And then from that period, the market rebounded by more than half the amount that it has sold off. And investors were quick to bring their money back into the market, and soon after that the market went into a major sell-off again. So during this period of time, when a lot of people put their money in at this stage, they lost a lot of money when the market basically went down straight after. So how does this relate to our current situation? Now, there is a couple of different scenarios that can happen when the market price reaches a major resistance line. So what could technically happen here is, while we are in a major downtrend, there's still people coming in to buy up the shares as people are selling their shares. So as a whole, we are in a current downtrend, and now we have kind of a rebound. So what could potentially happen is we can hit a resistance around this level and then have our shares going down again to retest the price, the resistance price that we established earlier on in the month of March. So if the price has dropped below the $2.05 amount that we established in late March, we could potentially go all the way down to the $1.80 support mark, which was previously established all the way back in around 2015. So we had a support here, support here, support here. So this is a major support line that we had back in 2014 and 2015. So that would be the next level that we could potentially be looking at. So why is this particular area also extremely important? It's because if we draw out the Fibonacci retracement levels from the recent highs in February all the way down to the recent lows that we had in March, we can see that the 50% retracement mark is pretty much right on with the major support line of the bull market for the last 10 years. Now, we don't need to worry too much about all these different numbers and values here at the moment. Just notice that going from the recent highs to a recent lows, the halfway mark of that, which is the 50% mark, would act as a major resistance, and this is where a lot of potential traders would come in and sell the shares around the resistance. So basically around this area, which is the $2.66 mark, is of major interest to a lot of people. So what are the possible scenarios that can happen? So we could hit the resistance mark and then have the market kind of chop around a bit and then go further back down, or we could go back down from the resistance mark, breaking the support line that was going up here. Or alternatively, we could keep on following the support line and then bounce back up into another bull market. Now, personally, I don't think it's a very likely scenario for the market to do basically a V shape to bounce back straight away from the recent lows, because the economic disruption of the virus that's been going around has been pretty severe. And the interesting thing is that while many people have been losing their jobs and then businesses shutting down, the market itself has actually climbed up around 25% from its recent lows. So as you can see, the market does not respond exactly the way that you would normally expect it to. So it is entirely possible that the market still be pretty unpredictable. So there's no real telling what exactly the market might do. But if I were to make a guess, there is more selling pressure in the future towards the downside, then we have a case for the market going back up again. Now, the last thing that I want to quickly look at here is to add the US S&P 500 onto the graph that we have of the market in New Zealand. So as you can see, this is the year-to-date US 500 market closing prices overlaid over the New Zealand price. And as you can see, it pretty much follows exactly, like the two markets pretty much follow exactly the same trend. So in the future, I'll be looking at both the US S&P 500 and also the New Zealand top 50 market to see whether there are similar correlations between the two, and whether looking at one could tell you what potentially may happen in the other. So that's about all I want to go over for now at this stage. Thank you for checking out this analysis, and I will see you in the next video.